If you trade natural gas, you have to pay attention to the 200-day moving average. I want to start by going right into some of the headlines right now with natural gas. So you can see here, we are eyeing the 200-day moving average, and I am going to be showing you that on the chart. I want to show you a couple more of the headlines as to the reason, as I have been talking about for the last 2 months, we have only been pretty much selling natural gas because of the summer months in the United States and less of a demand for the market. We are going to be talking about this 200-day moving average coming up. And then lastly, the unexpected inventory build versus the estimate. This is going to be very important, in my opinion, as how you should trade natural gas, especially this week coming up. So let's go ahead and get right into the analysis. Okay, so what you see right here is, first of all, the June 2025 contract for natural gas if you are trading this on futures. And then also notice that I am starting on the weekly time frame. So we took a bounce at the end of last week. So basically on Friday, we did hit and strike this 200-day moving average, as you can see right here. If we draw a Fibonacci level from where this price action started back in November of 2024 till now, you can see that we are also bouncing off that 88.6 Fibonacci level. This is very important because usually if the trend is going to continue south, it would need to close below the 100% Fibonacci level. Meaning if we had a weekly candle to close below, then the next strike point would be the 127 Fibonacci extension. So it is at a critical area right here that we have to pay attention to. So I am not a huge natural gas trader, meaning it's not on my top 5 that I trade, but I trade it when I believe it's ready. And I do believe it's ready for some form of a retracement. But again, if you are going to buy natural gas, you have to be cautious. And I believe you have to look to maybe start by scalping the market, because the demand for natural gas is definitely coming down because of the summer temperatures coming up in the United States. But there is an overflow of excessive natural gas right now. So we shall see how the markets are going to respond to that. So that being said, let's drop over to our daily candle. And you can see here again, we have already crossed on the daily. Okay, we did cross below the 200-day moving average. Now, keep in mind, these charts are going to be distorted, okay, because of the contract changes. So for right now, as we look at this daily, we need to move the floor to right here. Okay, and I'm going to show you why here in just a minute as we move over to this 8-hour chart. And I think this one here could be the telltale. Okay, so for right now, this floor, okay, this 3.0 area, you can see right here, basically 3.00 is dead smack in the middle of this box, is the current floor for natural gas. So that is your floor, meaning if you start buying natural gas and price closes below that yellow box, then you need to exit your long position, because there is no telling at that point how much natural gas can free fall. Okay, so I've given you now a floor. Okay, this is your floor. Now, where could you possibly take natural gas? Well, if we just look at this massive trend, right? We had begun to sell natural gas back in this area for those members that were in our trading club. And let's kind of walk through what's been happening with natural gas. So maybe you can see it if you are kind of brand new to trading natural gas. We had the close, okay, below the 200-day moving average. We came down. We had a nice Fibonacci area. we saw that the 200 rejected, another sell down, another Fibonacci area, okay? And again, if you have not yet checked out the video on Fibonacci, I'll leave that at the end where you can see it in the video description. Again, we had a nice 61.8 rejection there, and then we had another nice rejection of the 61.8 there. And so this tends to happen over and over in the charts. Not as much with natural gas, but you can definitely play the fib levels. And what's nice about the Fibonacci levels, okay, is that it can also tell you where to get out, meaning the Fibonacci levels act as support and resistance. And it also gives you that stop loss that you might need, which is always going to be the 100% fib level, especially if a candle closes above or below, depending on which side you're trading, buys or sells. So that's why I love Fibonacci levels and use it all the time. Hey, do not forget, if you are getting value on this video, and I'm going to continue with the analysis in just a minute, head down below and hit that like button for me. I appreciate it. If you're brand new and you want to learn more about natural gas, crude oil, indices, head over to the subscribe button below or wherever it might be and click on subscribe. And then here's something important that a lot of people are missing. And so I'll get a message, hey, I didn't catch your video. Well, you did not have all notifications turned on. So I've got a lot of videos coming out on mindset and psychology. And if you want to expedite your trading, if you want to join a community of traders so you don't miss these setups, okay, head over to my website, theprofessortrades.com. Come on in for almost $1 a day. You can come in and watch the massive value that we are giving in there daily, trading daily, and charts all time during the day, okay? And what's the worst thing that can happen? If there's no value for you, you can always hit that cancellation button, and then you'll be removed at the end of your period that you have chosen, okay? So let's go ahead and get back into the analysis. Okay, so we are looking at NG natural gas. We do have some traders that already went long at the break of that structure. Okay, so here's the good news. If you are currently long on natural gas, based on the price action, the last 8-hour candle at least did give us a bullish engulfing candle. When we apply our parabolic SAR, we can also see that we just received our first parabolic SAR to the top side. Now, I'm going to hide the parabolic SAR here for a minute because remember, if you are trading against the trend, which this trend is still bearish, you might only get 1 or 2 parabolic SARs and then it completely flips on you again. I'm going to show you that here in the chart, for example. So you can see here when we go back to the parabolic, let me grab a brush here. Your parabolic SARs might be very short-lived and choppy, and then the trend continues to the downward position. So this is no reason to get super excited yet that this is going to continue all the way back up to 4.0. But what I will say is that this is a start to possibly changing the trend, at least temporarily, on natural gas. And this is why you have to scalp the market and you cannot leave trades open when it comes to natural gas, because this one is known as the widow maker for that reason. And if you go below to the streaming at the bottom of the screen, you can see some of the latest headlines when it comes to natural gas. So we are going to give you some levels right here that you have to pay attention to. And the first one is coming up fairly quickly, and that's 3.217. Okay, 3.217. If we look at a Fibonacci level from this top to this bottom, you can see here, right, that staying with the trend, okay, natural gas is in a prime area to possibly see another push back down. We will have to wait to see. Now, we are coming up to the market open on Sunday, and if you've been trading natural gas for a while, you know that natural gas always has a massive gap on Sundays. So use caution with natural gas because these gaps can stay open for weeks, months. So I don't trade natural gas gaps just because of that longevity that I can stay open. So I just wait until the gap is closed, or we just trade directional positioning, zone to zone, And I'm going to show you that here as we move forward. Okay. So I talked about the 100 fib level, and that's right here. Okay. So now what I do is I get rid of these Fibonacci levels. And now I know, let me get rid of these candles. Okay. In order for the trend to change temporarily, we need to see in my opinion, an 8-hour candle close above. Until we don't get an 8-hour candle to close above, you should possibly try to avoid the longs and stick to the bearish moves. Okay. So if there was going to be a retracement in this period, you would look for a quick short sell around this area, and your exit would have to be the top of this yellow line or the first candle that closes. At that point, you switch to a long position. Okay. At that point, you switch to a long position. If they close up here, then the next major level, as you can see to my left here, is 3.397. And then the next major level there, what we've seen price both reject and take off, is about 3.52. And then we'll give you one more level just so it's fairly close to the trading field, 3.701. So if we kind of open this up, right, and then we head down to the 4-hour chart, okay, you can see that right now, natural gas ended between 3.0, okay, and that 3.15. But we're trading right now between 3.2 and basically 3.0. So I'll go ahead and mark up this floor where price wicked, and you can see it's right on 3.00. So again, this area here becomes your playing field, meaning you're doing everything within these two yellow areas until price tells you otherwise. And so there's only two options here. The first option is going to be that you get a candle to close above there, or if you slide down to a smaller time frame, okay, you get a 15-minute candle to close below this level here, and we'll turn this red, to then possibly take it right back down to about 3.0. Until then, you're looking for a possible rejection up here at 3.21. Okay. If we begin to see a candle become bearish in this particular area, this is a great risk to reward because your short position would look something like this, a very tight stop and trying to go down to at least the 200-day moving average. Okay. If I go over to my left, you can see here how the 200-day moving average will act like a magnet as well. And if we bring in one more average, which is the 50-day moving average, we're beginning to see here how these two are beginning to cross and possibly give us momentum back up to the upside. So if you are going to try to short the market here, you've got to use a lot of caution on that short, because if this thing closes above about 3.21, then the market will probably continue to the upside. Okay. So I want to go ahead and hide everything here and go back to the 8-hour just so you can kind of take a look at where this market is right now with the moving averages. Again, you can see here the widening of the averages, which is why the structure did become so bearish there between the 50 and the 200-day. On the 4-hour, we might see some resistance on this 50-day moving average, which again can then be the reason why price continues in a bearish movement. So we would probably need price to close above the 50-day moving average to continue that bullish momentum. Okay. On the 1-hour, here's what I was showing you earlier. We did close. Now, this is very interesting. Okay. Here is where you can see price action. We did close below. We had a retest, and then price is now on the 1-hour continuing up to the next levels that we've identified, and then possibly the 50-day, or I'm sorry, the 200-day moving average. So right now, everything is indicating, let me get rid of this. Everything is indicating that natural gas will continue up to about the 3.21 level, and then we shall see what it does there. So this is your playing field. Okay, this is your playing field for you natural gas traders. Take a look at the averages. Make sure that you are not stuck in a trade. And natural gas is one of those things that you have to close if the trade breaks a certain level, because it could run and it can run for quite a while. Okay, so I hope you got some value on this video. If you have any questions about trading in general, or maybe you have some questions about, how to trade this or anything else, I'm more than excited and happy to answer people's questions. Head down below to the comments and let me know, do you think natural gas is going to break that top level of 3.2 and head higher? Or tell me if you are going to stay bearish, only looking for bearish moves in the market when it comes to natural gas. Okay, thanks for watching. I hope to see you in the trading club soon, and have a fantastic and safe trading week. Thanks for watching.